Welcome to the maiden edition of IPSAS Clinic, the IPSAS Clinic. This is proudly sponsored by One Type Professional School. We have two programs on YouTube. That is the IFRS course, that is with IFRSs. And now we are looking at the IPSAS Clinic. In this episode, we are going to look at not less than 20 IPSAS. And the whole purpose is to assist students who are writing exam and are required to apply IPSAS, that's the International Public Sector Accounting Standards, in their examination questions. We want to assist the students to have full grasp of the IPSAS as they prepare for their examination. I will be your humble servant, Robert Amponsa Godo. Tell a friend to tell a friend. The links have been shared. Yes, you have the link being shared. You can join us on Telegram. You can always pick my line. That is 0549573161. You can always WhatsApp me to join the IPSAS Clinic. It's free. It's free. It's free for everyone. It's free for everyone. They want to look at IPSAS 12. IPSAS 12. That is the IPSAS on inventory. The IPSAS on inventory. The IPSAS on inventory. IPSAS on inventory. It's a very important standard that every public sector accounting student would meet it in exam, one way or the other. Okay, so let's look at what we have for today. Want to look at IPSAS 12. IPSAS 12. So IPSAS 12, which is similar to IAS 2 inventory. Then there are some few discrepancies, few differences. So IPSAS 12 inventory, IPSAS 12 inventory. What are the key issues? What are the key issues? Now, these are the key issues. We are supposed to look at some basic definitions. And on the basic definition, we need to know the meaning of inventory. We need to know the meaning of current replacement costs. And we have to know the meaning of net realizable value. These are the three key definitions that you would need. We need to also be aware of public sector inventory. When we say public sector inventory, what are some of the key examples of public sector inventory? Then we come to measurements. 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 So under measurements, we'll look at the initial and then subsequent. Then under subsequent, we want to also stress on inventory from non-exchange transaction. And also want to know the cost of agriculture produce. Agriculture produce. You know the Ministry of Agri, they are farmlands. So if they harvest their produce, how should they recognize it? Those produce are all inventory. How should they recognize it? That's what we are talking about here. Then we'll look at the cost formula. The cost formula. Then measurement technique. It's a very simple standard. The cost formula and the measurement technique is the same as what you know in FA. So the difference between this and the difference between IPSAS 12 and IAS 2 has to do with when it comes to the definitions. We have introduced a new definition called current replacement cost. And then the examples of inventory under IPSAS 2 may slightly differ from public sector. Public sector, we have some specialized inventory that we need to talk about. Then the subsequent measurements will also change a little to differ a little. Then the non-exchange is also a new thing. Agricultural produce is not that new. It's similar to something we have under IS 41 agriculture. Yeah, but the cost formula is the same. The measurement technique too is the same. So when you pick IPSAS score, as far as IPSAS is concerned, there are key differences between IAS 12 and IAS 2. So we need to look at such a standard. All right, so let's begin. Let's start. When we say inventory under IPSAS 12, what we mean? When we say inventory under IPSAS 12, what do we mean? So we are starting with the key definitions. We are starting with the key definitions. The key definitions. And the first one is what? Inventory. So we can simply say that inventory is any asset. Any asset inventory is any asset to be consumed in a form of raw material or to be consumed in rendering a service, or they are assets held for sale, or finally, asset that is used for the production of what? And I mean asset that is in the process of production. That is any asset in the process of production. For sale. In other words, we are producing it to sell. but it's not complete. So we are talking of work in what? In progress. So once we are talking of inventory, four things come to mind under IPSAS 12. Number one, it is consumed in the form of raw material. Number two, it is used in rendering a service. Three, it is held for sale. Four, it's in the production of what it's in the process of production for sale. Once the production is complete, it will be what? So okay. It is in the process of production for sale or consumption, any of them. But it's still work in progress. Take note of that. Number two, current replacement costs. I want you to pay attention to this because it's a new thing. There's a difference between current replacement cost and net realizable value. If you have just joined, this is IPSAS Clinic brought to you by One Touch Professional School. It's free for all students writing public sector exam or any exam that require the use of what? Application of IPSAS. So if you have joined, like the video by clicking on the thumb up like this. Just like it. Subscribe to the YouTube channel and click on the bell so that anytime we are live, you get notification. The meeting is on Mondays and Tuesdays. Mondays and Tuesdays. All right, shall we continue? Current replacement cost. Replacement cost. Take note of the difference. Current replacement cost, we are looking at the cost you are going to incur to replace the asset. We are looking at the cost you are going to incur to acquire that same asset at the reporting date. At the end of the year, if you are supposed to replace the asset, the same asset, how much are you going to pay for it? It's different from net realizable value. Net realizable value, we are asking that at the reporting date, if you are to sell the asset, how much will you get minus the cost that you are going to incur to sell the asset? So it's two different things. So current replacement cost is the cost. This is the cost that will be incurred to acquire the assets at the reporting date. At the end of the year, if you are to acquire the assets, or at any point in time, if you want to get the current replacement cost. But this inventory we are talking about, we are looking at the end of the year, how we can even get the closing inventory. That's why we are using the reporting date. And at any point in time, if you want to get the current replacement cost, then this is the cost you are going to incur in acquiring the assets. You want to acquire the same asset to replace. So that is your replacement cost, current replacement cost. But the cost, how much you get from the sale of the existing assets minus the cost you are going to incur to sell that asset is net realizable value. So number three is net realizable value. Net realizable value. We are saying that that is the cost. That is the fair value. We say it's the fair value less cost to sell. In other words, it is the amount. It is the amount that will be realized It is the amount that to be realized from the sale of the assets, less any direct cost. That is the net realizable value. This book. If you want to replace this book, you see the way I've used the book. If you want to replace this IFRS book, okay, when you go, maybe the brand new one, you buy it for like 120 cedis. But this book as it is, I may not, when I sell it, I may not get the market value of what, even the 120. But even if I'll get the 120, I have to deduct the selling costs. Perhaps I engage an agent to help me sell this book. So when I deduct the selling costs, whatever you get is the net realizable what. But take note, there are two different things. Okay. Now, the next thing is examples of what? Inventories. Examples of public sector inventories. In the exam, they ask you to give examples of public sector inventory. You have to give public sector examples. Examples of public sector inventories. So we can talk of the following as key examples. We can talk of military assets. Military assets like ammunitions, your ammunitions, bombs, weapon systems, weapon of mass destruction, all those military assets, they are all part of what? Inventory. Then we have maintenance. We have the maintenance materials that are used for maintenance. And then we have spare parts. Spare parts, unless it meets the definition of PPE and the IPSAS 17. Otherwise, spare part is under what? Is under inventory. Oil reserves. For example, in Ghana, we have oil. Those oil that we have kept as reserve, that remains unsold. Oil reserves, they are all parts. Oil reserves are all parts. Our currency, the currency that we have printed, the ones that we have not yet issued to the public, the ones that we have not yet issued, they are all part of our inventory. Unissued what? Currency. Unissued currency. So it goes on and on and on. There's one that is common in FR and then in the public sector, that is land. If you have land held for sale, land or building held for sale, it is what? Inventory. In public sector too, we have, for example, we have a public sector corporation called the Ghana Free Zone Authority. The Ghana Free Zone Authority. Yes, it's an autonomous, should I say semi-autonomous organization, because they are supposed to get subvention from government, but this organization that are able to raise enough funds, they don't get. So Ghana Free Zone Authority, they have lands that they sell. So for example, such lands, will be regarded as inventory, because the purpose of holding the land is to sell it. So that will fall under public sector, land held for sale. Land held for sale. Okay. Let's move to our outline and see the next thing. The next thing is measurement. Measurement, the initial and subsequent. We are almost there. It's not difficult at all. Measurement, measurement, measurement. Initially, inventory should be measured at costs. Initially, it should be measured at what? At cost. Then subsequently, it will depend on whether the inventory is held for sale or a consumable. Whether the inventory is held for sale or a consumable. Or it is a donated inventory. So inventory from non-exchange transaction. So an example is donated inventory, like inventory that has been donated to the organization. So if it is held for sale, then what the standard is saying is very simple. It should be carried at the lower of cost and net realizable value. So this one is the same as what we know in FA. But if it is a consumable, then it should be carried at the lower of cost and current replacement costs. Once it is held for sale, it means that the purpose that they want to hold it to sell it. The consumable here means that it's in a form of raw material or a consumable item that will either be distributed to the people within the organization, or it will be consumed by the organization in rendering a service or in production. So that is a consumable. Held for sale means that inventory will sell. The purpose that we want to sell. Consumable means that it will be consumed by the company. It is going to be consumed by the company, or it will be distributed by the company. If it's going to be consumed by the company or by the entity, or it will be distributed to the people within the entity, or it will be distributed to any other person, but without a charge, or even if there's a charge, it's at a nominal cost, then we say that it's a consumable. So consumable should be measured at a lower of cost and current replacement cost. It's a consumable. So once you consume, you have to replace it. So we want to look at the lower of cost and current replacement cost. That is the value of what? The inventory. But if it is held for sale, then it is the lower of cost and net realizable. In the public sector, you have to be careful. When you take something like drugs, if you see drugs in a financial statement of MDA, what comes to mind is that it's a first aid. They intend to what? Consume those drugs. But if you see drugs in a financial statement of a hospital, then it means that it's held for sale. Because at the hospital, There are pharmacy that they sell on drugs. So you see that thing. If you see something like stationery books at the university, yes, said for sale. And at the hospital, if you see stationery or books, you cannot say that it is set for sale. For hospital, we don't sell books. That place it will be a consumable. I hope we are making some sense. You should be able to distinguish between an inventory held for sale and consumable. For sometimes in exam question, they may not tell you that this is a consumable, this is held for sale. They will mention the name of the item. You have to be smart to say that, given this entity in question and the item, it should be held for sale or it should be what? Consumable. It becomes held for sale if by the operation of the entity, that inventory is what they operate in. They sell that inventory. Like I mentioned, Ghana Free Zone Authority. There are lands there. You cannot treat it as PPE because they intend to sell those lands. All the lands there are held for sale. But if you see Free Zone Authority, Ghana Free Zone Authority, having something like stationery, they are not into sell books. So if you see stationery there, it means it is there for them to consume, not to sell. So take note of the difference. Held for sale and consumable. Consumable means that it will be distributed to people, or it will be distributed at no charge or at a nominal charge, at a charge that is insignificant. Then, or it will be consumed by the entity itself, whether in rendering service, in production. That's consumable. But when it's held for sale, it means that the intention is what? Sell. Take note of the difference. Okay. Then we have donated inventory. That inventory from non-exchange transaction. Non-exchange transaction means that this one, the public sector entity is receiving without giving equal direct benefit. So we say non-exchange. It doesn't give any equal benefit in return. So something like donation is a non-exchange transaction. So if you receive an inventory as donation, then such inventory should be measured at the fair value. Should be measured at what? At fair value. So you take note of that. They can trick you by giving you the value in the books of the donor. They are trying to deceive you. All what you need is the fair value, the market value. At that particular date, they donated what? The asset. Take note of that. All right. Now let's look at the cost. The cost. We said that initially it should be measured at what? Cost. At cost. We need to look at component of cost. That one very simple. Component of cost. Component of cost will include the purchase price, if it has to be converted, conversion costs, import duty, that is non-refundable purchase tax like import duties, non-refundable purchase taxes. Example is what? Import duty. Then direct attributable costs. Direct attributable costs. If the inventory is such a way that that should be tested, then that pre-production testing, the pre-testing is part of the cost of the inventory. Okay. There are certain costs that must be excluded. Exclusion from costs. we have abnormal wastage or abnormal cost. In other words, normal cost is part of what? Cost. The normal what? Cost or normal loss is part. So abnormal cost or abnormal loss is not part. General administrative what? Overheads is not part. Or general administrative cost is not part. Selling cost is not part. Storage cost of finished goods. If the storage cost is for raw materials, then it's part. But if it's on finished goods, there is no part. Storage cost of finished goods. Right, so these are all no parts, so etc. Yes, examiners can ask you to calculate the cost and do, but in all public sector exams, I think examiners will be much interested in rather the subsequent measurement rather than the component of cost, because this is exactly like what we know in financial reporting. So we tend to move away from the cost issue because the cost is more often than not examined in level one. So subsequent measurement is very important to the examiner. So you take note of the subsequent measurement. If it is held for sale, the lower of cost and net realizable value. If it's a consumable, it is the lower of cost and current replacement cost. If it is from non-exchange transaction like donation, then it is at fair value. Take note of it. Very, very simple and all straightforward. Okay. Our time is almost about. Let's finish. Okay, so now let's look at the cost formula in the measurement technique. Cost formula. The cost formula depends on whether the inventory is interchangeable or not interchangeable. If it is interchangeable, what it means is that they are similar. They are similar in size and nature. They are similar in such a way that you cannot identify the one you bought yesterday and separate it from the ones you bought today. Then not interchangeable means that they are so dissimilar, so dissimilar. They are so dissimilar they are so dissimilar that anyone can clearly identify them. So for the cost formula, if it is not interchangeable, we use what we call specific identification. Specific identification means that you go and identify the date that asset was acquired and the cost they acquired that particular asset for. Specific identification. This one, you need to identify the date at which the date on which the respective inventories were acquired, and the price or the cost. So this is a book, this is a phone. These two are not interchangeable, which means that I can specifically identify when you bought this book and the price. So that if I issue this book, I know the price I should issue for the cost. If I'm issuing this phone, I know the cost. Because these are two different items that I will know. But assuming I gave some oranges. Oranges are not interchangeable. They are interchangeable, like ACI books, for instance, stationery. They are interchangeable. You cannot identify the ones you bought last week. You can't separate it, assuming it's the same design. You can't separate the one you bought last week from the one you bought this week. So we say they are interchangeable. So for interchangeable items, the standard requires you to choose between two models or two methods. That is the FIFO, first in, first out. What you know to be FIFO or FIFO. You need to choose between the FIFO and the weighted average method. So this one is the same as the one you know in FA. The weighted average method. Very, very simple. Now, in Ghana, in Ghana, in Ghana, the Controller and Accountant General has adopted the weighted average method. The Controller Accountant General has adopted, in other words, the government has adopted the weighted average method. In other words, all public sector entities in Ghana must also use the weighted average method. You can't use the first in first out because your financial statement should be in line with the GOG accounting policies. Very, very simple and straightforward. So that is about the cost formula. There could be a question on this. Okay. Cost formula. So this morning, I came to your various houses to present to you an explanation of IPSAS 12, the key issues. We are left with the last one, very simple. The last one has to do with the measurement technique. The last one has to do with the measurement technique. So the measurement technique, we have the standard cost method. Standard cost method and the retail method. The standard cost method and the what? And the retail method. Under the standard cost method, all what you do is that you build up cost. That is, the cost is ascertained. Here we say that cost is ascertained from the components, the respective components. That is material, labor, and then expense. In commercial accounting, we will say that the cost is ascertained from what you call the standard cost card. So the standard cost card will contain the raw material cost per unit, the labor cost per unit, direct expense, get you the prime cost, indirect, and all those things. So that's how we are setting costs. That's the standard cost method. It is the cost is derived from the standard cost card, where each of the components, the breakdown is given for us to know each of the component, the cost per unit. Then under the retail method, to get the cost, you just deduct the profit margin from the selling price, then you get the cost. So here, to ascertain the cost. So in other words, when we say measurement technique, it is just a technique for to ascertain cost, or a technique for ascertaining what cost. So to ascertain cost, you deduct the profit margin from the selling what price. Deduct the profit margin from what? From the selling price. So that is it. So our time is far gone. I wouldn't want us to rush to take questions. We want to take our time. So let's see this Sunday by 5 a.m. We'll meet and then solve questions on IPSAS 12. I gave you some 3 questions. Maybe I'll add 1 or 2. Then we'll go through all on Sunday, 5 a.m. So make time with us, 5 a.m. on Sunday. Please pick my number if you want to join an ICA class. Then One Touch is the best place for you. One Touch Professional School is the best place for you. We have the face-to-face and the online. The online is just like what you are seeing on YouTube. This is what we use in teaching the online. We bring you classroom experience in your homes. So you can WhatsApp me on this line, Robert, and I will attend to you so that you join and get the best tuition from One Touch Professional School. I want to go to the chat session and then take your questions. Take your questions. Please, if you have a question, go to the chat session. But let me see you like the video. You need to like the video. You need to like the video. You are 44 now, but only 12 have liked the video. 13 including myself. So just the thumb up, click on it to like the video. Like the video, the thumb up, just click on it. Please, any question? Please, any question? Please, any question? So I'm sending the Telegram link on your page, on the chat session, in the chat session. If you have not joined the Telegram link yet, you can join. One Touch IPSAS Clinic. So I've said it. You can click to join. Or go to Telegram and search One Touch IPSAS Clinic. One Touch IPSAS Clinic. Yes, join. Or WhatsApp me. I'll send you the link to join so that you can get the questions that we are going to solve. I can see it has been well explained and you don't have questions. So we can just pray. Or better say, okay, let's take, some people may want to take pictures. So let's quickly go and take some few pictures. All right, so let's start here. The first page. Move to the next page. Let's move to the next. Squeeze this one a little for you. Yeah, you can take this one too. Then finally, let's take this. So remember, make time with that Sunday, 5 a.m. We are meeting to solve questions on IPSAS 12. Sunday, 5 a.m. IPSAS 12. 5, not 4 a.m. 5 a.m. IPSAS 12. Thank you so much. I believe there's no question because I've not seen anybody sending a question. Only 24 have liked the video. Please, where the thumb up is, please like the video. Just like it. Once you like it, it will go viral. Others will see it and they also come away. It's free. It's free. Shall we have a word of prayer? Heavenly Father, we thank you so much for such another opportunity. Today being the first day in IPSAS clinic. We thank you so much for how far you brought us. We pray that let this IPSAS clinic go viral. Let this IPSAS clinic be helpful to students who are preparing to write their examination. Father, continue to grant them the retentive memory so that on the day of their exam, they can always reproduce and pass to glorify your name. This and many more we ask in the name of the Father and of the Son and of the Holy Spirit. Amen. So see you on Sunday for IPSAS 12 at 2. That is questions and answers. Thank you. Today too, I'm reminding you, remember your maker before it is too late. Remember your maker before it is too late. Shalom. Bye-bye.